Good evening, everyone. Welcome to closing comments here for July 23rd. Let's jump right into our charts and take a look at today's action. First up, we got our October live cattle on the board. We did see a nice little snapback rally here today across this cattle market, both live and feeder prices finishing higher on the day, but not without some early downside. Price breaking down off that opening range today, testing a new low at 217.37 for the year on this October live contract. But we did see a nice little snapback rally into the close today, finishing right around 221.5. This thing has tested some overextended levels here. We failed to get that relief rally going earlier this week. We'll have to wait and see what kind of action we get tomorrow, but if the bulls are able to follow through above today's high, we could get that relief rally going. Look for this market to rally back up into the high 220s, but we got plenty of supply overhead, lots of resistance. These averages coming down on price. We should see these sellers that get active again if we do come back up into the mid 220s. But in the meantime, not a good time to be getting super aggressive in this market. We should see some more wide ranges and some more choppy action down here. The bears are in control. We got a nice little downtrend shaping up here, so the sellers should resume that downside here in the next couple days. If we do get a relief rally, that rally will be sold into. Sellers are in control here, and be a good time to stay cash heavy and be defensive here. Wait for this market to stabilize and give us some better opportunities in the weeks to come. Next up, September feeders on the board. Nice little snapback rally here in this feeder market as well. We did get that opening range breakdown to all the way to 333 today, testing this yearly low, but failing to get any follow through below it. At the moment, this big range we've been in all year long continues to hold. These lows down here in the mid 330s are acting as good support. We just need to make sure that these bulls are able to defend this line going into the weekend. Any sort of weakness or breakdowns below this 333 low will signal some more selling pressure, and all this inventory from the current year will start to unravel here and drive this feeder market lower. But we just need to make sure these bulls can continue to defend this line. If we do get a nice strong rally here back up into the 340s tomorrow, we could keep this thing range bound. So we'll just have to wait and see. We are dancing right on the edge here, so this is going to be a good point to watch. And just continue to be defensive, be cautious here. There will be better opportunities to come. But if we continue to see these bulls defend that line, we could try and get a rally back up there towards 350 next week. Be cautious here. Any sort of closes below this yearly low will signal some more weakness, and I encourage everyone to get defensive and raise some cash if we do see some pretty severe breakdowns tomorrow. So be cautious down here below 333. In the meantime, these bulls are going to try and defend these range lows. We got a nice little battle going on here. I'll have to wait and see how this week finishes out. Next up, December corn futures on the board. Corn market continues to rally here following those crude oil prices. This thing seeing a nice little bounce up there towards 490 today. We could see this thing continue to dance in some wide ranges between about 475 and $5, similar to what we saw this spring. Expect to see this choppy action continue, nice wide daily ranges, but at the moment the bulls are in control and they should keep pushing this market up here towards $5. And next up, crude prices with a nice rally here today as well. For the last couple days, we have seen this thing push above those averages and test this downtrend line. Nice strong breakout here today, pushing back up there towards 92. Continuing to see some upside here for this crude market at the moment with this breakout above 87.5 and this follow through we see here today. Look for this crude market continue to dance around here between about 90 and $100, similar to what we saw this spring. And the bulls have the ball in their court at the moment, and we should see them continue to push higher. Next up, equity markets all giving up some gains today. The S&P breaking down below our bear pivot of 74.68. A lot of inventory built up over the last couple of weeks here, giving way. This market seeing a nice early breakdown below this level, and from there the selling pressure accelerated, driving this thing nearing 7,400 today. With this weakness and this weak close we saw, look for this downside to continue. We still have some pretty mixed action here amongst our indexes. Some good bases trying to get built, but pretty nasty reactions here on earnings from Google and Tesla today, weighing heavy on this market. And that's what's driving the S&P and the NASDAQ lower here. The Dow's got a little bit of weight in those, but not as much. But still, those big names and those poor earnings reactions here weighing heavy on this market. With that action, we'll have to wait and see what kind of results we get from next week's earnings. See if Apple, Microsoft, Amazon, or Facebook can try and save this thing. But in the meantime, expect to see some more choppy action here. This market continues to weigh heavy. If we continue to break down below these 50-day moving averages, we might need to start raising cash and get out of the way here while this market tries to find its footing. Tomorrow's action will be important. If we can see this thing stabilize and find good support, they could be setting up for a rally in the next week. But that we'll have to just wait and see. We'd like to see what kind of reaction we get to those earnings from those other big names next week to give us a little clearer picture. But in the meantime, seeing a little weakness here today, so not a bad time to be raising some cash, getting a little bit defensive here. We'll have to wait and see what next week brings, but we are starting to see this thing start to slip a little bit. So just be a little cautious. There are still some good spots to be putting money to work out there, but these indexes just remain sticky at best and are dancing around these averages. So just need to be cautious of any sustained downside below that 50-day. In the meantime, we'll just have to wait and see what next week and those big names earnings will bring us. Thank you, everyone, for tuning in this week. That's all we got. We will catch you guys over the weekend for our weekend market watch. Thank you for tuning in. Everyone have a good night.